So I'll go ahead and start the recording now. And the rest of the session will be recorded, as if any of you are having connectivity issues, which some of you expressed, you will be able to view this later on. So you can go ahead and do that. And then so for the next slide now. Before we get started, I just wanted to kind of remind all of us where we are. So we are part of a larger campaign called the Digital Pitch Contest. It's a multi-part campaign to coach social entrepreneurs, especially those working on international development issues, to improve and practice your fundraising pitch. And I know you were able to see for a little bit at least some of the amazing partners who have helped us in creating, curating our content for us today. So thank you so much to all of our partners. Some of you are on today. If you'd like to learn more about the rest of the campaign, you can go to digitalpitch.globalinnovationexchange.org. And I also wanted to tell you, for those of you who don't know, to the next slide, please. I also wanted to tell you a little bit very quickly about Global Innovation Exchange. So as most of you probably already know, we are a technology platform. And our core mission is to help social entrepreneurs, especially those who are addressing international development challenges or in developing countries through innovations, fundraise more effectively. We do that in a few specific ways. One, you can look for funding opportunities that are currently accepting applications on our platform. We update that every single week. Second, you can research funders, which you'll learn today, how important it is as part of your fundraising, really knowing the strategic priorities for your funder, as well as, who have they funded that's similar to you or maybe not similar to you or at all. And so you'll learn a little bit about that soon. And then finally, you can actually create an innovation profile to feature your social enterprise, nonprofit, or really your innovation that's addressing any social, environmental, or other challenges in developing countries on GIE. This helps you get in front of funders as well as others, such as journalists or implementers who can support you in your work. And you'll continue to learn throughout this series how important it is for you to build champions, which is actually our next session in May, which I'll tell you about at the end of the session today. And so one last thing I wanted to tell you before we move on and introduce Cathy. So next slide, please. So just a reminder where we are today in terms of we are part of we're the first part of a three-part digital workshop. Today, we'll be focusing on an Investible story, and there are two more parts to it. And then what I wanted to tie back to is the innovation profiles that I mentioned in the last slide can actually be used for you to apply to our digital pitch contest. And you can win prizes that are relevant to this contest as well. Again, if you want to learn more, this is a wonderful resource. It's completely go to digitalpitch.globalinnovationexchange.org. And before we introduce Cathy, I think Greg wanted to chime in here with a poll.
Yeah, thanks, Sweta. Hi, everyone. To reintroduce myself, Sweta mentioned my name earlier. My name is Greg Payne. I'm part of the CASE Smart Impact Capital team. And I noticed we have a good number of folks on the line here, and what I wanted to do, and it's always helpful to get a sense for who's joining us, is to share the poll that you should see in front of you right now. Tell us a little bit about who you are, where you're coming from, what organization you're a part of. That will help us all get a sense for who's on the line, and also help our speakers, Cathy, Nick, tailor perhaps some of their comments to meet your needs. And it looks like, as expected, we have a strong representation of social entrepreneurs. I'm seeing this poll come through live, and I'll share it in a moment. Strong representation of social entrepreneurs, and a good number of you are currently raising funds, so I'll share that now, so you'll see what I see. So like I said, a good number of you social entrepreneurs. That's as expected. We do have a few representatives from the other category, and accelerators or incubators, but once again, as expected, so great to see so many social entrepreneurs here. Handful of you, not sure if you'll be raising funds, or perhaps you'll be raising funds soon, but many of you actively raising funds. So that's great. I think what we'll be addressing today will help you immediately then. Thanks so much, Sweta, for the opportunity to share that poll there, and I'll hand it back to you.
Thank you so much. And without any further ado, I'd like to introduce you to Cathy Clark. And she will then later on introduce you to Nick. But thank you so much for joining us today, Cathy. And we're looking forward to hearing all of your wisdom.
Thank you. My pleasure. Can you hear me okay?
Yes, we can. Thank you.
Great. Fantastic. So welcome, everyone. I'm so glad you could join us today as part of this great free series by the Global Innovation Exchange. And we at CASE are delighted to share a little bit of the work that we've been doing over the past several years to really support impact entrepreneurs as they approach their fundraising task. And for those of you who may not know, CASE is a research and education center that's located at the Fuqua School of Business at Duke University in North Carolina. We've been working with supporting social entrepreneurs and capital markets that support them for over 15 years. And over the last few years, we've been working to create this toolkit called CASE Smart Impact Capital, which we're going to draw from a little bit for today's discussion. And we're delighted to have with us today Nick Pearson, who is the founder and CEO of Jacaranda Health, which is an incredible organization. And he's going to give a little bit more life to some of the ideas that we're going to be sharing by giving his own experience in pitching and trying to get the right investable story, and talking a little bit about how that can change over time. So we're going to give you a 1-2 punch with me with a little bit of background and Nick with a little bit of real life, and hopefully that will be useful. And then after that, we'll open it up for Q&A through the chat function. So feel free as we are talking to send any questions that you have to the questions for speakers /Sweta chat identity there. Sweta will be collecting those questions and sharing them with us as we go. So that should work well. So what I wanted to start with is kind of what is this thing called CASE Smart Impact Capital. It's a toolkit that we've created. We took over 3 years, and the gist of this was that we realized we were running our own accelerator for health ventures in Africa. And we realized that as impact entrepreneurs approach their fundraising journey, there are a lot of steps along the way that some of them skip, and there are kind of common mistakes and pitfalls. And so we created this toolkit. It's completely online. It contains short videos, kind of very compact how-to guides, and then decision tools. And our goal from the very beginning was not to do a course where you have to sit through weeks and weeks of material, but to allow an entrepreneur who's trying to get something done to go in and kind of quickly say, what are the rules of the road of this that I might not be aware of? What are the things that I need to understand? And then how do I make a decision that will allow me to get to the next step? And so given the context of this toolkit, which as you can see has 9 modules along the right, the modules themselves are just kind of collections of these videos and decision tools. They're really around the common sequence that any entrepreneur needs to go through to get from, I think I might want to actually raise some investment capital, to this is the deal I should feel confident signing. But what we've done is we've integrated it with impact. And so there's actually 18 different decision tools in our kit, and I think 16 of them are different because of the impact that you are trying to create. Your decision making is slightly different, and so we're really trying to undergird that. And as part of that, a really important part of that is, what's the story that you are actually going to tell to investors to intrigue them and get them to want to learn more about the opportunity to either fund you or invest with you. And so what we're doing today is pulling out from actually our 7th module, which is investor cultivation, some of the tips that we were able to crowdsource. The reason it took us 3 years to produce this is we crowdsourced expertise from hundreds of entrepreneurs, hundreds of investors around the world, and then kind of boiled it down. And so one of the most important pieces of advice that investors and successful entrepreneurs had about reaching out to investors is that you have to craft a compelling and consistent investment story, and that story has to resonate. The other thing that came through is once you choose a frame of a story, and we're going to go through them in a few minutes, it's really important that for each investor, you stick to that frame. What's very confusing for investors is if they get an email from you and it seems like you're one kind of venture, then they see a deck and it seems like you're something else, then they meet with you in person and it seems different entirely. They lose trust that you have a clear and compelling reason for being. And so the other thing that we do in our module, which we're not going to do here, is we actually give you tips about how to create all of the documents kind of at once. So what does your email look like? What does your executive summary look like? What are the different ways you can do a short pitch deck or a long pitch deck, and so on, so that you have a consistency. Today, we're just going to go through the stories themselves and talk a little bit about how they're different and how you can use them. And then if you wanted to get more information, you could register for the toolkit and get our very, very detailed guide. So why do you need an investment story? So, the key of this is that every interaction with an investor is actually an opportunity to persuade them to dig deeper with you. And so what you want to do is you want to give them not only a coherent and compelling story, but you need to align it with their blend of social and financial preference. Now, I wish that impact investors came with a label, because most of them don't. Most of them say we're an impact investor, and anyone who's done this a little bit knows that some of them really, really, really care primarily about financial impact, and some of them care a lot about social and environmental impact. But most people are in some blend in between. But what you have to do is try to figure out what is the thing that they are looking for, either because they're interested in or because they've made a promise to their own investors that that's what they're trying to invest in, that aligns with what you're doing and that is compatible. If you do that well, it gives them a frame to understand the rest of what you're going to tell them, and it helps them understand how their capital is aligned with your objectives. This seems so straightforward. This seems like a no-brainer, right? That this is what you do. You pitch and investors see what you're, but I cannot even tell you how many times I've seen the disconnects happen when entrepreneurs, by accident, choose the wrong frame for the investor that they have in front of them. So let me give you an example of that. And I'll just kind of put the stories up so that we can start to talk about them. I was at a pitch event about a year and a half ago. It was an angel investment network. So an angel investor, they 95% of the time are investing equity. And it was a pitch event, and the entrepreneur came up and she pitched her venture for the 7 minutes that she had allotted. She talked about the need, she talked about the solution, she talked about how important it was and why she had dedicated herself. She shared some of her impact data, which was very convincing. And the first question she got when she was done was, why are you not a nonprofit? And she handled that as best as she could, and she got off the stage. And then I pulled her aside and I said, you chose the wrong frame for this pitch. She thought that she was pitching to a bunch of men who didn't think a woman should be an entrepreneur and should be a founder. She was actually quite offended. What I said to her was, you did not convey to them your unit model. What they were asking you, by asking if you were a nonprofit, was, do you have a margin, and is that margin repeatable? Because they didn't get it from what you told them about your impact. You skipped the financial step. And so what she realized is she had pitched an underserved needs story, which is very typical to pitch to grant funders. There's a population here, it has an underserved need, I have a solution, here's the impact it's having. What she forgot to do is realize that the investors she was pitching to were either interested in a high growth opportunity or impact delivery at scale. And they would not be interested in the other two because of the kind of capital that they had and the kind of investors they were. So what I coached her to do is to say, well, if this happens again, what you need to do is tilt toward an impact delivery at scale story where you can show, and she actually had this data, she just didn't share it, where she had a % of margin on every sale. She was selling more and more every month, and she was in fact entering into 2 more countries. So she had a huge upgrowth story. She had a traction story. She just didn't present it with the lens that these investors needed to hear. So with that example, and I can tell you more of these mismatches, I'm going to go through each of these stories one by one with a little bit more detail. And then I'm going to talk a little bit about how to choose among them. But as I'm doing them, I want you, because most of you are entrepreneurs, I want you to think about which of these stories do you think most resonates with the way that you portray your own business right now? And then I want you to separately think about one specific funder who you're either approaching right now or you're about to approach, and what do you think where do you think they fall in terms of what they are most interested in hearing? And so again, we can talk to some of those questions after we go through the 4 types. All right. So the first type is the high growth opportunity. And this is kind of the default type for most venture capital. This is when a venture says, we're exploiting an opportunity, we think it's going to deliver market rate return, we think that equity is appropriate, there's going to be significant revenue, there's a large market, we can define a profitable unit model, and we can get to it fast. The investor here expects market rate returns, has a motivation about impact, but isn't going to dig that deep into it. Often that's kind of aligned with, I fund renewable energy, or I fund agriculture, or I fund Africa, or something like that. It's very high level. It's not very in-depth around outputs or outcomes. And this is usually a fund, an angel investor, or an institutional investor that has equity. And 95%, when you look up what should go in a pitch deck online, or if you Google it, 95% of your advice is around this story, which is, how do I convey the market size? How do I show what the value is to a customer? How do I quickly show revenue traction? You would not spend too much time on the impact, because this investor doesn't actually care about the granularity of impact often that investors of the other types would. And you have to very, very clearly define your unit model and your ability to scale fast. That's because for an equity investor to make money, they have to see 5 to 10x growth in your revenues within 5 years, or their model will fail. So the biggest barrier for this one is convincing investors that you have a high growth opportunity that they can understand, and that a unit model that they can track. Okay. The second type is an innovation play. Here you're saying, we have a new approach that can either redefine or disrupt an existing industry in a way that ends up with better impact. So this is really focused on uniqueness, disruption, leapfrogging. It's often linked to technology. This is the kind of pitch that launched companies like FedEx and Google, or impact businesses like Aspire Foods, which many of you probably haven't heard of, which is a company that breeds edible insects to create cheap protein sources for underfed populations, and won the Holt Prize a few years ago. Somebody who is saying, I've got a cool way of doing something that's going to dramatically change this industry segment in 5 to 10 years. And you as an investor, the investor that you're targeting when you're making this pitch, is looking for a big new idea. It's very common in, for example, competitions or university competitions. They may have a relatively high risk tolerance. They might be finance first or impact first. It kind of doesn't matter. It's a very blended audience. But they're trying to do something that they think is going to capture imagination, get press, or be seen as something quite innovative and novel. This is usually something that you do when you're pretty early stage. Once you start to scale, people like to see more evidence and that you usually shift to a different story. But the barrier in this one is showing investors that you have a willing customer, the right timing, and some sort of leapfrog idea. And again, if you're looking for fellowships or you're looking at competitions, this is commonly the frame that those competition judges are applying. The next story is the impact delivery at scale. This is where you're saying, you know, we're going to deliver real impact on our thesis, and we know we have a scalable business model. So for this one, you have to have a strong thesis about how your offering creates impact. You have to differentiate that from what already exists. And this last point is extremely important. Nearly every investor that I've ever met who cares about impact delivery at scale wants to see an alignment, a almost frictionless alignment between impact and financial return. There are different ways that people talk about this. Bridges Ventures calls it being in lockstep. Village Capital talks about alignment. There are others, but this idea that every unit that you sell is going to directly have impact on whatever problem or stakeholder that you believe is your beneficiary is extremely important for these investors. On the investor side, they come from across the spectrum. They commonly have a little bit more risk tolerance, and the importance there is that they are willing for you to get to scale. It could take longer than 5 years. It could take 10 years. It could take 15 years, but they want to be with you through that journey. They are slightly more committed to impact. And these terms, impact committed, impact motivated, are a set of labels that we have inside the modules where you can actually kind of decide what kind of investor you're talking to. And they're often someone who has a little bit more flexibility, like a high net worth individual, or an institution that has impact embedded into its mission, such as a community development finance institution, a development finance institution, or a private foundation, or a government agency, right? So somebody who really wants to see that if we invest in you, you are able to not only do something that's very impactful, but really scale it up over time. And so the biggest barrier for this is showing that your impact thesis is not going to cause a trade-off as you grow, and that there is a connection between this investment and your ability to actually scale what might already be working. This is not something, even though people have this in their head, this is usually not the first capital that you're going to get. This may be the second or third capital that you're going to get, where someone's saying, I want to see that you have a unit model that works, and now I want to believe that my capital can help you scale it. The last investable story is the addressing an underserved need. And this entrepreneur says, we can build and sustain a business that solves an important problem for an underserved population. You usually are working in a risky market, serving an underserved customer. You have a very strong impact thesis that you are often using grant capital first to prove out and learn about. Your investor cares about that underserved population, has a pretty high financial risk tolerance, and is often providing grants or guarantees first, and then kind of moving into more common investment vehicles. And they may be a government, they may be a foundation, they may be a family office. It's somebody who has said, I really want to solve this problem. And you'll see how this works when we talk to Nick about what Jacaranda does. The pressure here is a little bit different. The pressure here is really on the impact side to show that you understand and can address the customer needs, but also to give them confidence that you can do this in a cost-effective way. And show them that as you become more adept at delivering this product and service, you can continue to do that in an effective way that retains the impact as you scale, right? So this is often a precursor. If you are doing an underserved population, you start with this story and then you hope to get to an impact to scale story or a high growth story, depending on your model. But these four stories, what we found is if you as an entrepreneur choose the story well, it will truly help you convey where you are and what you're after, and what the things that you are going to pay most attention to are. And that's one of the things that you actually need to align with your investor on. So, sometimes people say, well, why would I choose a story? Shouldn't I just kind of say whatever they want me to say? Well, no, because this is a relationship. This is not just cash. This is about what are the things that you guys are going to manage together over the next few years, and coming to agreement on the most important attribute of that management, or attributes of that management, can be really, really helpful. So what I'm going to do now is actually open the floor to Nick. Nick is the founder and CEO of Jacaranda Health and has a great set of experiences about moving among stories. And so, Nick, if you can unmute yourself, I think I'll throw the floor to you.
Hi, this is Nick. Can you hear me?
Yep.
Hi, Cathy. Thank you. And hello, everyone. I'm very excited and happy to be able to join you this morning and share our experience in this space. And hopefully it can help illustrate some of the points that Cathy is making and also be useful. I'm going to talk a little bit about our own journey as an organization and our transition to seeking impact capital, and then also share a few kind of observations and recommendations, such as they are from our experience in this journey, and then happy to answer any questions. And Cathy, feel free to jump in and kind of direct me as you need if you want to sort of put a finer point on any of these points. So I run an organization called Jacaranda Health. Right now we're and we started about 8 years ago. I was originally working in Kenya for an impact investing firm called the Acumen Fund at the time, and was really interested in this idea of we were investing in healthcare. There were a lot of gaps in the market for kind of low-cost, sustainable, scalable solutions and service delivery. My wife is an obstetrician, so maternal health is something I've always been passionate about in, as many of you know, in East Africa and most of the subcontinent. Maternal health is a big issue. There's gaps in terms of quality of care, of access, and in the Kenyan market at the time, there also weren't a lot of private providers who were delivering care that was high quality, that was also patient-centered, that reached lower income consumers. So that was the kind of impetus. I left Acumen, I started Jacaranda Health, and have been on this journey since. It's been really exciting. We started, just for reference as part of this story, we started as a nonprofit, and there were two reasons for that. Even though I came from the kind of impact investing background, I have an MBA, that's my background. We realized that there were two things. One, there was a lot of R&D upfront that we would have to do to sort of, both on the kind of clinical side and on the system side, to develop a model of care that would be able to deliver this care that was sort of high quality and low cost. And it was hard to do that in a purely investable sense. In other words, that we needed to kind of catalyze that with grant funding. At the same time, there was also I wasn't absolutely convinced that there was a model there in terms of sort of on the investment side. In other words, like, we weren't sure that we could kind of generate the kinds of margins that we would need to return capital into investment. So we thought it would be safer at the time. Back in those days, the impact investing landscape has evolved a lot since then. In those days, it was harder to get grant funding as a for-profit, and so we knew we needed some catalytic grant funding up front. So we went in as a nonprofit with the assumption that we could spin off a for-profit later as the opportunity arose, as the business model developed. So over the first couple of years, we spent a number of years sort of iterating on the model. We had a mobile clinic. We set up our first sort of emergency obstetric care center. Now we have our kind of version 2.0, which is a full-fledged maternity hospital in the sort of lower income parts of Nairobi. We've been building a brand, and we've managed to demonstrate that we have some of the highest quality care in the region. We do deliveries at about $150 a person. We've managed to get the cost down and demonstrate some really exceptional outcomes in terms of quality of care. This second slide, the next slide, if you can kind of move me to that, she just gives a few, which I won't touch on in detail, but gives a few examples of sort of some of the impact that we're able to deliver in terms of the clients that we serve. At the same time, two things happened, as we were sort of beginning to get traction here in the market. We realized, the sort of the business model side of it was hard, and it was taking us a while to sort of figure out how to get those unit economics that Cathy referred to right. In other words, to make a fully profitable, self-sustaining model, and we're continuing to push towards that. We also realized that a lot of the innovations and the sort of IP that we had developed would be really helpful in the public sector as well. So we had some close relationships with public maternity hospitals where 80% of the women in Kenya and the region deliver. And so we set up a sort of a wing of the organization that was focused on essentially kind of adapting and replicating some of the innovations that we've developed, and partnering with the public sector to try and improve quality of care in those hospitals. And that's been really exciting. That's really just been sort of evolving over the last 3 years, but we've been working with a growing number of government hospitals, 17 now this year. We're looking at expanding into more counties this year and reaching a larger, and also starting to have an impact on sort of policy at the national level. So that's an exciting work stream, but as you can imagine, it's very different than sort of scaling a for-profit chain of hospitals. And so about a year ago, we, as both the hospital, first hospital was getting closer to kind of breaking even, and we saw sort of light at the end of the tunnel in terms of profitability, which was the big barrier to kind of bringing on investment capital. And also the fact that this kind of public partnerships, nonprofit side of our operation was really taking off. We realized that it would be smart to separate those two work streams out into different organizations. And so what we did was we spun out, we kind of worked with pro bono lawyers and spent a bunch of time internally sort of figuring out the right way to do this. But we spun out a for-profit social enterprise, which is still mostly owned by the nonprofit, but essentially a for-profit social enterprise that is a for-profit healthcare service delivery organization. Right now, it's our flagship maternity hospital, and then we have the other side of the organization, which is a nonprofit, which is going to continue to be financed by public and foundation funding. So each of those has their own path to scale, and I'm going to talk a little bit about because it's most relevant to the conversation here, about this sort of for-profit spinoff. So it was a really fascinating process, because all of a sudden we went from raising essentially foundation money to support and scale our operations, to going straight into kind of where you guys are now, which is looking for social investment capital, and talking to impact investors and seeking capital to scale that way. That's been going on for the last 6 months, and over the last 6 months we've raised about $550,000. We've spoken to probably 25 different impact investors. It's still an ongoing process. I hired a CEO for that venture, and he and I are working closely on the kind of scaling pitch. We're raising kind of money at 2 different levels at the same time, both for to complete a seed round to help us get to profitability, and then also starting, because these timelines of investment are quite slow, also starting to have conversations with investors about the Series A in 2019, where we'll be looking to raise a couple of $1 million to expand to more hospitals. And our goal on that side is, once we have the investable unit, that we should be able to scale to sort of 10 maternity hospitals across the region in the next 7 or 8 years. And I think it's a strong pitch, but we're still, because our unit is not yet fully profitable, it's been an interesting process to navigate. And I'm fortunate enough that I'm actually based here in Durham. My wife works at Duke, and so I've had the good fortune to be to work closely with Cathy and the CASE team, and have the opportunity to benefit from their advice and test some of the modules in Smart Impact Capital, which are really phenomenal. And I would recommend them to anyone who has the opportunity to kind of read through them. I think they can be really helpful in terms of sort of tailoring your pitch and figuring out how to approach this issue of investment. And this has been a fascinating process. So I wanted to kind of maybe share a couple of observations and potentially recommendations that might be relevant to you guys. Does that sound, Cathy, were there any, let me pause there for a second, if there are any sort of things that you wanted to ask or highlight before I jump into a couple of kind of observations and recommendations?
Thanks, Nick. That's great. I would love to hear your advice and recommendations, but before you do that, I wonder if you could just spend a few minutes talking about how your story has changed. You talked about how your goals have changed and your structure has changed. Can you talk a little bit about the stories that you've used along the way and how they've changed?
Yeah, absolutely. And I was going to kind of lead off with that because I think
great.
It's really important. And I think this kind of rubric of the different storylines is actually really helpful. And the way I would describe it is you can kind of imagine from what I've described about our business that we kind of straddle the two latter storylines. It's sort of impact delivery at scale and addressing an underserved need. We're clearly addressing an underserved need in the community, but we're trying to drive towards this question of impact delivery at scale. And as Cathy pointed out nicely in her presentation, the addressing underserved need is a lot more compelling when you're talking to sort of really soft investors, the sort of foundation guys who are really, who are impact first, and impact wholly in some case. And, if you, as you sort of progress into conversations with impact investors, and I'll talk a little bit more about this in a second, you really need to be, we've found that we need to be able to articulate the impact delivery at scale storyline. The addressing underserved need is useful for grants, but not not compelling, and a few investors, but not compelling enough to the sort of vast majority of them. You need to be able to talk about the unit economics and how it's scalable, and how as your scale grows, your impact grows as well.
Great.
And
yeah, do you want to, you have other, what's interesting to me on the slide here, the first slide that you have data on, is that me kind of parsing that slide, I would call that an impact slide, mostly, right?
100%.
Almost everything on that slide is an impact piece of information, except the last one around cost.
Yeah, 100%.
Right, and so yeah, go ahead.
Yeah, and the journey for us, which has been interesting, is, it's like being a primarily grant-funded organization where, really your constituents and stakeholders and investors care first and foremost about your impact. I mean, we've had to, it's partly the DNA of our organization. It's partly the nature of our kind of catalytic funding, is we've built a much stronger infrastructure for measuring that impact and demonstrating it. So that's easy for us in some respects. In other words, like, we're really good. We have a lot of credibility walking into those conversations about the impact side of the story. And the big shift for us is really having to kind of beef up our capacity to answer the investment questions about the scaling, the unit economics, the costs, et cetera.
So what kind of things did you have to do to change your story from what's on that slide to get this investment capital and talk about impact at scale? I mean, you talked about a little bit, which is what's your time to profitability? Your unit is the hospital itself. Is that right?
Yeah.
Right. Choose a unit model, and we have materials in the modules about examples from like 10 different ventures and how they've chosen using models. So yours is the hospital itself. And then you've had to basically help investors understand what are the drivers that they should watch as you aim to get towards break even or profitability, right? And start tracking those.
Yeah. Yeah, absolutely. And, and I think those are standard sort of social impact metrics of, understanding your unit economics, figuring out how to project when your unit breaks even, and then, how many units you need to cover your overhead, the overhead cost of the management costs of the organization, when you get to EBITDA positive, and, and when you can start servicing, whether it's debt or returning equity to investors over time. And so that process has required the most thought. I mean, we've always known our unit economics and been able to project kind of, when we think we're going to break even. And we've had to be sort of more aggressive about thinking about not just, when we do it at a single unit, but like how that story evolves over time, because the investors are looking, they're often looking in sort of 5 to 10 year timeframes, and they want to see, okay, well, that's great with this one hospital, but what do you look like 5 years from now in terms of the number of units you have, how much ability you have to service debt, et cetera. So it's taking a slightly longer time frame with your kind of projections, and also starting to bake in the assumptions about the servicing your cost of capital.
Totally makes sense. And also just seeing, understanding everyone knows that the first unit is the hardest, but what an investor wants to see, especially for an impact at scale or a high growth, is that there's some economy of scale that kicks in when you have multiple units. And for high service organizations, which I would characterize a hospital to be, right? That may not, that is an open question.
Yeah.
Right. And differentiating for people, no matter what your product or service is, what are the things that have high variable costs and what are the things that have low variable costs as you continue to add units? This all sounds very technical and MBA-y, but that's what investors are actually looking for to be convinced that you can scale.
I mean, I didn't have this as a recommendation, but it does raise a great point, which is that, you know, look, I have an MBA. I worked in impact investing sort of on the soft side for a while, and I still find this stuff very difficult to do. In other words, building financial projections and financial models is tough, and some people are really good at it. And so, you know, chances are, if you're a social entrepreneur who's not coming from the financial sector, you will want to outsource this. In other words, and there are a lot of great opportunities, I think, to partner with MBAs, business schools, business school consulting programs who are excited about this kind of thing, and enlist someone to help you with that, you know, building out a projection model that sort of speaks the language of the investors that you're going to be talking to, because that's what they're used to digesting in terms of sort of their, you know, in terms of the pitch that they want to see.
Great. Any last pieces of advice? I'm sure you have a few others.
Yeah, I guess the couple of, and I'm sensitive to the time too, but a couple of them, I think, and these sort of reiterate a couple of points. So first of all is, you know, as you point out, there's a sort of a spectrum of emphasis in the impact investing landscape between impact first versus, you know, kind of the guys who are primarily commercial with a little like zest or flavor of impact. But the reality is that in our experience, in the sort of 20 or 30 impact investors that we've talked to, that no matter where they are, the bar is a lot higher and a lot more solid on the investment side. So, you know, the hurdle on the investment side is significantly lower. You know, for some people, it's just as simple as like checking a box, like, hey, you're operating in Kenya, sure, it's my impact.
You meant to say impact side. You said investment side, but you meant the bar on the impact side is lower.
Yeah, sorry, that's what I meant to say.
Yeah.
And so, you know, shifting that from, I mean, in other words, even the people who present themselves externally, or their websites will talk about how impact oriented they are, you know, their investment bar is going to be a lot higher. So, you know, the recommendation that comes out of that is you need to put more work onto the investment side of it. Chances are your impact side of it is, if not good enough, then I'm not saying to ignore it, but like it's an easier hurdle to reach in most of these conversations. The other kind of corollary to that is that, and this is an observation, Cathy, you know the space a lot better than I do, but you know, from conversations that we've had, and it may just be this region, but a lot of the impact investors seem to be sort of influenced or inspired by the kind of VC model, which is kind of the kind of high growth model of investment. I'm not sure why that is exactly, whether it's some of the early players in the space were kind of operating in that way, or whether they sort of read stuff from Silicon Valley blogs or whatever. But like, I think it's a lot more common to see people where the sort of high growth opportunity storyline resonates more easily with them. And so if your business doesn't fit that, I think it's important to think about, I mean, you don't have to, obviously you can't make your business what it isn't, but, and it doesn't have a sort of hockey stick growth kind of path, or, you know, sort of a 10x home run unicorn kind of thing going on. There's still a value and an opportunity. And I think this has been a learning lesson for us, is to sort of work to incorporate the kind of big vision and big potential. I mean, they're still going to be looking at, okay, well, my investment is in the next couple of years, so talk to me about the unit economics for hospital 1 and 2. But like, you at least want to give a nod to the fact that there's an opportunity to reach across the region or the continent and, you know, get to 20 hospitals. And that's been a sort of a learning process for us a little bit. Is at least—
I think that's fantastic advice. And it's actually advice that I've seen some of the support programs actually give specifically to women entrepreneurs, which is, don't forget to portray the bigger vision play of what you're doing to intrigue investors. If you really just stick to your knitting of what you're sure you can do, you're missing a persuasion opportunity, which is interesting.
Yeah.
So I guess if we want to throw open the floor for questions, and they can be to me or to Nick, and we're happy to answer some. So Sweta, do you want to toss us a question?
Yeah, happy to. Thank you so much, Cathy and Nick. That was very helpful, and I enjoyed especially the conversation that the two of you had towards the end. That was great. So the first question is from Leslie, who says, what if you think that multiple investable stories apply to your company or technology, and how do you prioritize that? And there were a couple of questions that came up that were kind of similar to that around the topic of sort of how do you go about figuring out the right story?
The right story, yeah. So I guess there's it's not automatic, right? So part of it depends on what stage you are at in your development. And as part of the modules, we actually have a little diagnostic that helps you understand where investors will think you are in terms of your stage. The early stage, the more early stage you are, and to us, early stage is someone who either doesn't have a clear unit model or doesn't have a profitable unit model. Okay, those are the kind of two definitional boundaries. For those, you will tend to be, you could be open to all four of these, right? These are all stories that you can use in the early stage. The high growth has the highest bar for what Nick was talking about, of kind of the portrayal of financial opportunity. If you can portray a very large market, a large addressable market, with a set of traction that your customers are telling you is there, and you can imagine a high growth opportunity from the start, that is probably the easiest way to raise money. But most social ventures cannot do that, or they can't do it right away. So then you're in the second three, and then the issue is, what is the problem that you are using this next round of capital to solve? So are you raising the next 500,000? Are you raising the next 100,000? Are you raising the next 3 million to do what? And again, we have this diagnostic to help you start to parse that. Are you trying to get to a break-even model? Are you trying to replicate a model that already works? Are you trying to prove that something works, though you're not really sure that it works? So for example, we have a case that we do in my class for a venture called Embrace. Embrace was an infant warmer that was trying to be used in low resource settings in India. They went out and they did a pilot. It took them about a year. They ended up testing it with, I think, 2 hospitals and 40 actual infants. That's a very small pilot. They probably need to do some more testing. And so you need to think about, if you are doing more testing for a pilot to see if your customer will actually pay, or to see if the product has the attributes that you expect, you're probably closer to innovation play or addressing an underserved need than you are at impact delivery at scale for the round that you're going for. So it's a little bit of an interaction. The second question is, who are you actually pitching to, and what do they care about? And learning to read for clues, either in the materials that you can get to before you meet them, or actually in the meeting to hear the kinds of questions that they ask. And we have a guide around that too, of kind of what people ask and what it actually means when they ask, because they're not always direct. How about another question?
Yeah, sure. This one can go to either Cathy or Nick. Nick, maybe you've gone through these practical steps, and you can help folks out with this question. What do you recommend as a next step? So if I've just been exposed to these stories, what would I do immediately as a next step to start reflecting on what story might be right for me?
2 things. I think one would be, to get this deck and the recording, and we had that pre-read, and sit down with your team and think about, as a group, which of these stories do you think are matching where you most are currently, and then who are if you are trying to get funding, who are the top 2 or 3 funders or investors that you're approaching, and can you do a little research to figure out what stories you think would most reverberate with them? And then you'll kind of get a lay of the land and say, well, do I have to develop one story, or do I need to develop several stories, right? And then you'll start working on your materials to make them aligned with these stories. And then you'll try them out, see how it goes, and you'll get feedback along the way. You can do that with just what we have here, or we'll tell you in a few minutes about what else the toolkit has that can help you.
Great. And maybe we have time for just one or two more questions. What do you think, Sweta?
Sure. Yeah, I think we can do. And this is a little bit of a continuation of what we're talking about here. Is when you are having a conversation with a few different investors, if you're pursuing different investors who may be interested in different type of stories or have different priorities and positions, how do you approach that? Do you tell different stories to different investors? What would your advice be around this?
Yeah, my advice is not to tell too many different stories. I feel like you have, again, kind of where you are now and where you're trying to get to. And I think you want there to be some consistency about those two things. So maybe you're going to tell your grant funder about the underserved need that you're serving and what you need to do to build to an impact at delivery at scale story. You might also be talking to a debt funder who really does impact delivery at scale, but you're saying you're making those two things consistent. What I wouldn't recommend is that you try to tell 4 stories to 8 different audiences, and you'll end up confused, and they will as well. But I feel like what you're trying to do is kind of say, here's where we are now, here's the things that we care about. I want your particular capital to help me with these problems. And the story is it's almost like just a frame and a shortcut for that. I don't know if that makes sense. Nick, do you have any other advice on that?
Not particularly, no. I mean, I think it's a little bit of a judgment call in terms of, I agree in general that you can't, there's a risk, since most of these guys know each other and talk to each other. I mean, that the point that Cathy made earlier about sort of triaging your potential investment is important. So when I look at East Africa and healthcare, for example, there's 20 guys who are interested in healthcare in the region. But then as you sort of slice and dice, the flavors of capital and the different sectors of the market they're interested, you may end up only with a short list of 6 or 7 people who are sort of realistic prospects for you. And, and chances are, most of them know each other. And so I think it is important to be consistent. And, insofar as some of them might, if they're sort of softer or more foundationy, they may be willing to invest in different kind of pieces of the puzzle that you need to grow, as long as you're clear about that. But you do risk, as Cathy said, you risk sort of alienating them if you're telling totally different stories to different investors.
I thought the other thing is becoming so familiar with these that in the conversations, when someone says to you, why are you not a nonprofit, or how are you going to be profitable, knowing you need to flip and answer a different set of questions, right? So part of it is knowing how to flip back and forth between impact and financial as people are leading you to do that. And as Nick said, the investors don't come with labels. They're often a little inconsistent themselves. But saying, what are the main points that we would put into an impact delivery at scale story, and having that in your back pocket, and what are the main points that we would put into an innovation or an underserved story, and having that also in your back pocket could be very, very useful to you to actually, in the moment, figure out what people need to hear.
Yeah, I mean, one note of encouragement I would say about that is I think that, it's rare, unless you're doing this in a sort of a pitch competition, like these conversations are not sort of Shark Tank conversations. In other words, there's only a handful of people, they're committed to the region, they're committed to the sector. And, most of them you'll probably be having multiple conversations with. So you have the opportunity. I mean, you don't want to walk into that first conversation sounding totally ignorant about their investment hypothesis, but you have the opportunity to really, at least initially, sort of suss them out for what they're, and chances are, I mean, what we've found with a lot of the investors is they're still figuring out the market too and figuring out their investment hypothesis. They're trying to decide, hey, is it, primary care clinics or secondary hospitals that we're investing in or whatever. So, there's a little bit of an opportunity for those sort of conversations to co-evolve. So it's not just hey, everything has to be right for that first conversation you have with them.
Totally agree. So we only have a few minutes, so maybe I will just start winding down. Is that okay, Sweta and Greg, if I do that?
Yep.
Go ahead.
Great. So I just wanted to give a little bit more information about what else is in this toolkit. So obviously this toolkit is available for anyone now, and we'll give a discount code at the end for people who want to log in. It's also one of the prizes for the competition. And it really concentrates on, why am I raising capital? What is your actual ask? What kinds of capital and funders are right for me? And then the how-to. We just did one small piece of the how-to, which is how do I develop effective materials for a story. I just wanted to let everyone know that there's so much more here, and it's all self-guided and self-paced, so you can get in and do what you need to do and get out. The toolkit is right now being used in over 100 countries. We have partners, governments, networks, accelerators, universities, and so on, who are helping us try to basically set a standard for how entrepreneurs can more easily navigate their capital raising. So just to give you a little bit of a sense of the traction that we've gotten with the toolkit and how we are trying to use it to get to thousands of entrepreneurs around the world. For you guys, we would love to, we're offering you this discount code. If you're interested in accessing it, you go to casesmartimpact.com and enter the code SmartImpact10. And if you're part of a group that might want to license it in bulk, the licenses are individual user licenses. If you're part of a group that wants to do it as part of a course or an accelerator or something else, please email us. And just to leave you with this stat that we've been doing some studies, and 95% of our recent cohort reported increased sophistication in raising capital. And that's our goal. We want to make life easier for the people who are trying to have impact with their businesses so they can raise their capital and get back to business. So that's the end of my segment. Sweta, you want to talk about the next part of the series?
Yes, absolutely. Thank you so much. So next up, as we wrap up, just wanted to mention a couple of you have asked us, about the digital pitch contest. The next session that's going to be happening, a three-part session, is going to be on May 17th. We're actually going to be in Nairobi live to do that. So if any of you are based in Nairobi, please email me. I'll share my email at the end of the slide, but it's essentially admin@globalinnovationexchange.org, and I'd love to meet you. And that one will be focused on building champions so that they can help you with your fundraising efforts as well. Next slide, please. And then for those of you who asked me about the digital pitch contest, and as Cathy mentioned as well, this toolkit is one of the prizes, and there's a few others, so please learn more about it and apply. It's really simple for you to do so, and it's a great opportunity for you to actually practice some of the things that you're learning here. And as Cathy mentioned, you really should have one pitch that you're pitching right now, ideally, so you can put that to practice on the innovation profile. Next slide. And so right here is the email address. If you have any questions about the digital pitch contest, or if there were any questions that you had that we didn't get to address today, please let us know. Nick has also offered to answer some of the very specific questions that some of you were asking about Jacaranda Health. So if you have any questions that you wanted to ask, please send those to us at admin@globalinnovationexchange.org, and I'm happy to connect you with Nick or with Greg or Cathy as needed. Thank you so much. And yes, I see questions coming in about the recording and the deck. We will make both of these things available to everyone soon after. So thank you so much for joining, and we hope you gained something useful for your social enterprise.
Thanks, everybody.
Thank you.